Yo, yo, yo. Good evening, ladies and gentlemen. Good evening, pattern watchers. Mad love and respect to all of you passing through. Salute, Nikolai. Mad love from Canada. Wherever you are in the world, ladies and gentlemen. It's quite a sad time. Quite a sad time. Yes, Jaser, I agree. Dragos. Dragos it is that said it. It is Black Friday and there is lots of discounts in the chart. But in order for there to be a discount, someone had to pay. And that's the sad truth. Billy from Philly, what's happening, brother? What is good? Yo, yo. Toblerone, what's happening? Wicked. Dane, what's happening, bro? Ladies and gentlemen, we need to address something this evening. You see, the difference between a trader and a holder is a trader doesn't care. He looks for momentum. He looks for movement. But the unfortunate truth of the game is the holder will always end up paying the price. Sometimes it's good to pay yourself. Always take what is given. Because I can promise you one thing. The profit in your position is not guaranteed. But I promise you the market will be there tomorrow. And that's such a cliche. But that is the unfortunate truth about the marketplace. It's not the first time they've done this, guys. And it's not the first time we have mentioned what they're likely to do next. And in tonight's stream, we're going to understand the basis of this move. Regardless of whether it was motivated by news, inflation, tensions across the world. They only need an excuse. Ladies and gentlemen, if you are new to the channel, be sure to like and subscribe. Welcome to Traders Reality. My name is Tino. Let's have a conversation, guys. Okay, then. In front of you is the proof. They don't care about price. They care about where the money is around price. You see, all of what you see in front of you, ladies and gentlemen, is people committing liquidity, people getting hyped up, people checking YouTube, people checking all sorts of social media narratives across the board, justifying why they need to buy Bitcoin, why you can't miss out on this big opportunity, warning, urgent, emergency, exclamation mark, hazard warning signs, madness. All to trigger the idea of scarcity and the fear of missing out. Well, ladies and gentlemen, unfortunately, you are amongst the master and we are all the puppets. Yes, that's the sad truth about fear and that's the great truth of greed. All right? We don't want to ever miss out on the opportunity to make a quick buck or make as much money as possible. Likewise, we don't want to ever take anything which we would believe is going to continuously increase in value, and we would never want to come out of a position that looks like as if it's continuously going in our favor. We get blinded by greed, and we also ignore fear. We ignore the fear. That's what I mean. People don't react. They don't look at what's happening and they don't say to themselves, you know what, I should actually pay myself. Why am I in this game? Am I here to try and test my tolerance to loss? No one ever wants to boast about losses. The idea of diamond hands is a narrative that should not be endorsed in crypto. What's the point in being in crypto if you ain't gonna take a penny out of it? Why do it? You know? Even in casinos, they tell you to watch out. They tell you to be, call this number if you have a problem. Casinos take care of you guys. They take care of everyone. But in cryptocurrency, it's about who can hold the longest. Are you in a position to be irrational? You can't be the market maker, but you can follow him when he moves from one direction to the next. You know? I don't want to be seeing people talking about they lost this, they lost that. You know? That's what I don't want to be seeing that. And it's a sad thing. I'm not hyped this evening, ladies and gentlemen, because I know at the expense of the traders who are not paying themselves and holding on to dear life, what you see in front of you is a clear indication of people just not taking the hint. That's the truth. And that's the sad truth about trading. People don't pay themselves. That's why it's such the failure rate for trading is huge. But the sad truth is this. I can imagine that the reason why 95% of traders lose is because 95% of them don't pay themselves when there is an opportunity to be paid. The market will be there tomorrow, ladies and gentlemen. So let's dive into what has actually happened and what we can expect Bitcoin to do next. Firstly, let's understand what's in front of us. Since the start of the 42 mark, Bitcoin has seen a nice little move to the upside. We were all taking advantage of the shorts. We were all laughing at the shorts. Why are you going short? Why are you going short? But the truth of the matter is, whilst the shorts are being absorbed, the longs are being fed the bait. The longs were being taken in. They were being sucked in. This pattern's going to work. This pennant, this triangle, this flag, all of these narratives, on-chain analytics. Quite frankly, it's irrelevant. What are they going to give you guys, the retail trader, a justification to open a trade in the charts? All right. Stick with me on this, ladies and gentlemen. All right. I'm not saying don't invest in crypto, but why are you in crypto if you're not going to try and make a penny off it? Does Bitcoin need to move to an unbelievable amount for you to realize a return? You shouldn't be in the game if you're not going to pay yourself. Now, holders have a different point of view. Traders have a different point of view. Traders trade movement. Holders look at value. Holders look at where they can get in cheaper and look at how soon they can get out at a higher price. I get the idea of what a holder is, but even holders should pay themselves, because the more you pay yourself, the more you take out of the market, the more you can put back in. And then that way you don't have to hold too long to realize a decent return. Okay? Now, I'm going to pull up some images. Okay? First, we're going to start off with what the story was with Bitcoin not so long ago when the shorts were eaten alive. This is the image right here. And this came with Bitcoin's move to the upside over here. Okay? Now, check this out. As you can see, we understood that the shorts were coming in and the longs were being eaten alive. They were taking the long liquidation points. All right? I'm not even looking at price. Don't even care. I can see that the longs are being taken and they were just eating away at their liquidity. The shorts were seeing happy days. That's what they were seeing. Why didn't they pay themselves? Price started to come up. They became in denial. They were so afraid that this was not the move to the upside. Bitcoin was not going to continue higher. That's why you see lots of these red bubbles going up, because it's people trying to catch the shorts. When it drops down, you notice that there is a lot more red bubbles appearing. Why? Because traders are solidifying their reasons to go short. Okay? Market maker is going to take all of that liquidity, and he did just that. Look at how all these shorts were just trying to catch the shorts and they just couldn't do it. And it's until they got to this point in the chart where there was a massive influx of shorts that were opened. And then from this point on, okay, they then decided to spike higher right here. Look what they did here. They hit those shorts one more time, hit all the liquidation points. The shorts were exhausted. This is where they started to go long. Look at all these green dots are coming in. Look at all these green dots. Green dots. This is where all the pennants and the triangles were all drawn out. Okay? Look at all these longs being opened right here. Longs, longs, longs. The psychology of the chart was Bitcoin's pulling back. Buy the dip. Buy the dip. That's what was going on. All right? And then, of course, before all of that was happening, you can see what they did. How they sucked in all the shorts from the move previously. Okay? Eating away at the liquidity. So what I'm trying to say to you, ladies and gentlemen, is this. Okay? Bitcoin has no purpose when it comes to the futures markets. Okay? No purpose whatsoever. Why? Because it's simple. The market maker does not care. He doesn't care about your opinion on where you think price is going. Just look at what they've done. They have now induced $19 billion worth of shorts in the chart. Everyone has rushed to Bitcoin. At the same time, they've just eaten approximately, what? $10 billion worth of longs. $10 billion worth of longs. That is people's money. It's not something that should be celebrated. However, it's something that we exploited. And that's the truth. Let's look at price action for a second. Ah, man. Last night, I shared this projection with the Patreons. And I showed this to you guys earlier on. All projection zones have been taken. 43,276, 42,882, 41,775. And we even went down as low as 40,480. Oh, sorry. 40,014. They broke the range, ladies and gentlemen. They took out this previous area here where they had encouraged enough longs to go to the upside. When you drop onto the higher time frames, you can see bright as day, they've just attacked the previous pool of liquidity. The 50% retracement right there. Just look at the despicable behavior right there. 50% of the vector candle, the blue vector candle, they came down and took it. 40,000 triggered those longs, pulled price back up because this candle wasn't the way it was just now. It came all the way back up and then they've just pushed it all the way back down. What caused this, ladies and gentlemen? Well, we need to understand what was going on in the first place. Okay? Bitcoin rising, Bitcoin moving up. This is Bitcoin's move. Everyone's seeing and justifying why Bitcoin needed to go higher. You see the M formation appearing here. We were saying that in order for Bitcoin to solidify this move, they would need to break into this area here to take out the liquidity that is trapped up here by the retail trader to induce traders to go long again. These are the things that you want to be looking for. But the problem was, in and around all of this zone right here, the market was in fear of what was going on with Ukraine, Russia. We have dollar yen. Dollar yen's taken a complete bleed to the downside. Okay? Complete annihilation. All right? Dollar yen, in my opinion, is on its way towards another third move to the downside, towards the 3 times ADR. Why? Because Asia is going to respond to this information tonight. Look at this. Like, what's going on? So has price dropped because of the news? Has price dropped because of Russia? Or were they going to do it anyway? Did they just use the news to really move price? Because if they were preparing for it, ladies and gentlemen, stick with me on this one. And all my pattern watchers understand this. If they were preparing to do this, surely even the speculation of the war or the tensions overseas, they would move Bitcoin so much more sooner. Marketplaces would react much sooner. Okay? Remember, the news is just a catalyst to give them an excuse to be very volatile in the marketplace. It's justified. Because, oh, there's a little bit of tension overseas. Look at the treasury yields. All right? They've been dropping. Yeah? Look at gold. Phenomenal. They are in fear. They are scared. Look at this chart. Yeah? Taken on the 16th, yesterday, where we were trying to understand the disparity between Bitcoin, gold, and the USDT market cap. Anticipate the 416, they've smashed straight through that. They're probably all the way up at 430. Let me have a look. There you go, 432, right there. Complete retrace back up. Okay? Is it possible to assume that they're going to come into this range? Would it be valid to assume that from this point right here, could we assume that if USDT is going to trade back into 4.5%, all right, 5.2% move to the upside. Yeah? So let's go to Bitcoin and look at where 5.2% marries up there. Let's stick with the assumption. Where's price? Right there. 5.2% will take us where, ladies and gentlemen? Oh, funny enough. Full recovery nearly of the vector candle. Frightening, isn't it? 38,384 would take us to the majority of the recovery of the vector candle. Does that mean Bitcoin's move to the upside is invalidated? No. There is still light at the end of the tunnel. In order for them to move higher, they need to move it down lower. They need to pick up the liquidity to build their longs by hitting all of the long liquidation points, because in order for someone to sell, someone has to buy. And in order for a short to be covered, someone has to buy it. And Mr. Market Maker buys all the shorts that need to be brought based on the margins of the retail trader who went long, and his liquidation point is being taken. Why? Because when a long is closed, it is sold, and it can only be sold if it is purchased. And who is in a position to buy $10 billion worth of long liquidations? Mr. Market Maker. So in some aspect, we have to thank him for his contribution to society, ladies and gentlemen. The only thing that we need to do is we just need to pay ourselves. I don't care if you're a holder. I don't care if you got diamond hands. I'm not interested. I'm only interested in you understanding that if you can take money out of it, regardless of what your objective is in cryptocurrency, take something. Reward your efforts. All right? We can't behave like the market maker because we don't have an infinite supply of liquidity. Do you understand? We haven't got market maker money, because we'd all be running our own markets. We'd all be approaching Binance and offering our fees to supply liquidity to the retail trader. Your longevity in crypto, or even in the game of investing, is to grow the bag. All right? It's in these instances where Bitcoin, look at it like this, from a holder's perspective. Okay? A holder has sat through a mad killer drawdown if they were buying Bitcoin in and around the 60 range. Silly drawdown. Okay? And then he has become comfortable with it. He's gotten used to the idea of sitting in the red. That's a bad mistake. That's not diamond hands, ladies and gentlemen. And I hate seeing people encouraging the idea of diamond hands. Who wants to sit in a loss? No one. Because the number one thing that causes people to leave this game and add to the tally of why people fail at this game is because people hold on to losses. Yeah? If you wanted to get a hold of Bitcoin back in the early days, we've missed the boat with Bitcoin trading at $100. That's gone. It's done now, ladies and gentlemen. There's no point. If you're new to cryptocurrency and you like the idea of what it can do for you, I want to encourage you to come away from that way of thinking. Don't fall in love with the idea of what trading can be for you. Fall in love with the idea of the science behind it. Fall in love with the idea of how the market moves. That's what you fall in love with. Because there's one thing I can promise you. If you execute your trade correctly based on your understanding of how to apply and read the way they move price, the only thing that can be delivered at the end is money. So I'm guaranteeing to you, if you understand how to execute something, the end result of it is cash. Why would you be focused on the cash in the first place when you really want to understand how to execute the process to achieve the cash? We know it's going to happen. I mean, the odds are in your favor, ladies and gentlemen. It's either going to go up or it's going to go down. You're not at a roulette table. You don't have a 35-1 chance of winning. No, it's either going to go up or down. You're either going to go in the direction it's going or you're going to go in the opposite direction. But for the new guy, his battle is, he likes to see how long it's going to take until it proves to him that he's right. Say goodbye to your ego. We're not interested in egos. We're interested in getting our money in good and taking it out. Okay? Looking at Bitcoin's behavior, ladies and gentlemen, the move has been somewhat volatile. Now we're going to see the emergencies. Now we're going to see the warnings. Now we're going to see Bitcoin's crashing all the way down to 20K, to 10K. Listen, they would not corrupt their own business model. They're not going to send it to a place where they can't induce people to step in. If this coin is genuinely the whales or the big boys coin itself, where they're going to try and push it to a point where they're happy to accumulate more of it, well, the decision that you've got to make, guys, is do you want to ride that momentum, or do you want to play the game of how cheap you think that they would want it to go? I think you stand a better chance taking advantage of their impulsive moves to the downside and their impulsive moves to the upside. For anybody new to cryptocurrency, be careful with leverage, because the result of why we see this is because people are using leverage. All right? And that's the truth. Forgive me, ladies and gentlemen, if I have taken you on a journey over these past few days where it seems as though I'm ranting away about why people should do this and why people should approach this. Quite frankly, ladies and gentlemen, this position, this play with Bitcoin right here has only happened because people had liquidity in the charts. People, viewers, traders all over the world. Yeah? I lost 10K, I lost 20K, I lost 30K, I got wrecked, I got liquidated, I need to go work at McDonald's. What are these comments about, man? It ain't right. It's not a great thing to be happy about. Now, if you want to have a bit of fun, happy days, just use, keep it as cheap as possible. But if you're serious about the game of trading, all right, the idea of trying to make money in the first place is wrong. Do not think about it. Sorry to burst your bubbles, ladies and gentlemen, but I will spit to you the harsh truth of this game. If you're trying to make money in trading as you first come into trading, you ain't going to make it. Flat. Done. Finish. Order a taxi. Get out the stream. It's not going to happen. Because that's what they want you to think. Why do you think you see it advertised all over the place? X leverage, this leverage, okay? Use only a small amount. Get a bonus of $1,400, $5,000 when you sign up. Do this, do this. They're getting it back from you because they know what you're going to do. If you're not going to deposit $100, you're going to deposit $200, $300, $400 or $5 or $10K. You're getting that. They're getting that money back, guys. That's why they give away so much of it, because you're going to give it back to them straight away. All right? The same money that you're being given as a bonus is only the leverage you're using in the first place anyway. It just doesn't make sense. You know? So if you are new to the channel, guys, be sure to subscribe. Why? Because we understand something about this marketplace. Now, I've been trading a long time. Okay? I haven't been trading crypto for that long. I've only been in the game of crypto for a year. But I've been trading for nearly over 12 years. I've been in the game to understand the cycles and the behavior. And the one thing that cryptocurrency, Forex, commodities, gold, all the exchanges that provide us the facility to buy and sell assets in the futures markets, there's liquidity providers. They are everywhere. They decide where it's going to go based on how they manipulate traders to believe it's going to go in one direction. How many people took advantage of the flag pattern right here, or the belief of it? How many people were of the belief that this was going to happen, this descending wedge madness, and it breaks out, and then before you know it, you're adding more positions as it's dipping, and then before you know it, it collapses. Hey, come on. Justify, oh, it's a failed pattern. Shut up. Ain't no such thing as a failed pattern. Understand the liquidity. What is going on? Let's break it down. Key, whole, and half numbers. Where are they? 40K. 43. That's all we need to see. Ask yourself the question. What are they doing more of at the highs and not following through with it? It means they're building up for something else. Where is the liquidity that they are probably trying to aim for? Right down here. Okay? Where could they encourage more people to go short? Right here. Where could they actually start getting people to believe it's going to go to the upside so they can build their shorts at the highest point by providing them the opportunity to go long? Right here. Right here. Right here. Because once they've set their longs in this area here, once the retail traders has gone long here and the market maker has gone short here, okay, he's now contained the range, okay? If we go back to this position, or should I say this chart right here, the stop hunt range. The understanding is if the retail trader was of the belief it's going to come down to buy the dip and it moves straight back up, all right, they could have made another attempt in these areas here where retail traders were committing liquidity. In other words, the market maker was saying to himself probably, okay, boys, let's look at the logic. We've got over $10 billion worth of longs trapped in this range right here. Shall we make another attempt to the upside to try and induce a few more longs, take out some of the liquidation points for the shorts, get the guys who were trying to go short to go long by moving price higher, and then we bring it to them? Well, they had done enough already in this range. They move price down low with aggression. They break the 200. Look at how they come to the 200 EMA and show support. People expect the retrace. They paid the price. Anything below the 50 EMA, what do we say? If the moving averages are pointing down, 3 o'clock, 4 o'clock, 4 o'clock, 5 o'clock, your momentum is to the downside. The second they start trading below the moving average and they expand away from it, you want to go short. All right? They come down into this zone right here. With the presence of vectors, the vector ranges in here. Why? Because this is where they can shift out of the range, because in this zone right here, they had enough guys to go short at that point. There were guys that tried to go short. So the market maker's saying, okay, we can realize more returns on our shorts by sending price down lower here. Okay, vector range is there, vector range is there. We can send price in this zone right here to get them to try and go short so we can get more longs built at lower prices whilst we're attacking everybody else's long liquidations and taking back our short positions that we had built earlier on. When it goes up, they're building positions to go down. When it goes down, they're building positions to go up. That's what the algorithm does. And it executes these positions thousands and thousands and thousands of times per second. All right? Notice how they brought it back to this. This is where retail traders tried to go short and they wouldn't allow them to go. They were pushing price down lower but not breaking down. What did it mean? They were preparing the longs, building the longs below the key 43 zone. And what do you see at the 43K number? A breakout to that range, solidifying the longs. They move price up, building the shorts at the higher prices. We're now above the 44K range. Pin high 1, pin high 2, pin high 3. Happy days. Drop. And they do it at speed. And they come back to the same point where they had already trapped enough longs and the shorts where they were battling to try and move price down lower. Look at the wicks. And they utilized that liquidity as well. And then they moved all the way down into the vector candle range. Just add a little nose right there. And there's his smile. That's Mr. Market Maker laughing in our faces. But you can avoid that, ladies and gentlemen, if you're of the understanding of how they operate the business. We know there's cycles. We know there's patterns. These patterns are psychological. They are not static. The idea is this M formation right here is designed to make you understand the liquidity that gets pushed to the upside is to trap the traders to go long to keep their liquidity trapped because they believe it's going higher. When it comes down to the 50 EMA, it's the idea of inducing the idea of a buying the dip idea. Back up it goes. Then they hold, they hold, they hold. Stop hunt low, rise. Shake out the buyers, induce the retail traders to go short, bring it back up. It is a terrible game, ladies and gentlemen. It's horrible when you sit and break down the way they do it. Do you see why these sort of psychological impacts in the chart will have so much more precedence than wedges, than flags, than even moving averages, okay? But if you understand at what point in the chart is the market trying to induce traders to believe price is going higher, in other words, they hit a zone so frequently, yet they don't actually follow through with anything. And remember, whenever they move at speed from a zone, you know they're preparing a move. What do you see in this chart, ladies and gentlemen? The presence of 3. 1, 2, 3. Drop, retrace, continuation to the downside. That, ladies and gentlemen, is your pattern. Cycles upon cycles. What day is it today, guys? Thursday. What's Thursday? Midweek reversal. How many people are new in this stream? How many people are brand new to the Traders Reality stream? Firstly, I want to thank you very much. How many of you are new to trading? I need to know who I'm speaking to right now. How many of you are brand new? Me. One. Happy days. Yeah, I should take a breath. Newish, new. Wonderful. Okay, if you haven't got these indicators already, get them. Pinned to the top of the chat is the website where you can download them free of charge. All right? But what I want from you guys is this. You have to get into your minds whether you are a trader or whether you are a holder. And in with the holding game, I'm going to include swing traders as well, because swing traders principally do hold on to positions. I'm a scalper. I'm in and I'm out. If a position plays out favorably for me, happy days. Okay? Happy days for me. Because as a scalper, all right, my goal is, in essence, to try and exploit the idea of Bitcoin going at speed into a zone. Okay, so this was my short previously, and I'm still in that short. Okay, took the short from this zone on this pullback right here. I say 43,000 and what was it? 43,031. That was my entry, and we're still sitting tight. But that was a scalp, ladies and gentlemen. And it was a scalp that turned into a hold. I had to hold it because momentum was appearing in the chart. You see, I'm always going on about make the distinction between whether you are a scalper or a holder or a swing trader. Why? Because your mindset's going to adjust to that reality. As a scalper, I should have been out of the trade after it had broke below this area here, because they could bring it back. But because they moved at speed, I understood that they were going to go to the next point in the chart, which was the psychological high where they had encouraged traders previously to go long. And that's where traders are getting stopped out. And that's why you see like for like. Yeah? Well, if you get caught in a bad, if you get caught in a bad trade, isn't it better to just ride the trade out? No, not really. You know, it's why would you want to continuously hold on to a losing trade? What would you be proving? What would you be proving by holding on to see if it plays out? All you're doing is delaying the time it takes for the market maker to take your money. So it means that before you even opened the trade, you didn't have an understanding of when to get out. That means you came to the charts with the idea of just giving money to the market maker. Yes, Adam, you remember that? I didn't even know how to use TradingView. That's how sad the days were. All right. But what I'm trying to say to you guys is, and if you're looking to understand when the bottom is, what bottom are we talking about? What bottom are we talking about? Because if we're still in line with the understanding of the cycle, ladies and gentlemen, this is where we are. By principle, okay, in front of you, and for the new guys, this is a cyclical pattern. And it's from Forex. So from the start of the week through to the end of the week, this is the behavior of price. So Sunday night when the markets open in Asia, we have Sunday, Monday. Rise up level 1. That's day 1. Rise up level 2. That's day 2. Rise up level 3 peak formation. This is day 3. Midweek reversal. That's on a Wednesday in Forex. Drop level 1 Thursday. Drop level 2 Friday. And then Sunday, Monday, they come back into the same story. Now let's just look at cryptocurrency for a split second. There will always be a variation of it. But let's draw it out. There's a bigger pattern right here. We got a rise up. And then we go into a peak. And then we come up again into another peak. All right? And we've got another M. And now we've just seen the drop to the downside. Okay? By the time they're finished with the liquidity in this area, by principle, we would probably see another W formation in this zone. Okay? Now that's when you're looking at the smaller time frames. If we go on to the 4-hour time frame, it's a different story. Look at what's happening here. We have got a big W. Now hear me out here before everybody starts losing their mind with things. There's a thing called cycles within cycles and patterns within patterns. Right now, we are looking at this range because Bitcoin can move from this range and go to 100K if it wants to. Okay? We need to understand the accumulation of a zone and how soon they stay in one point and how soon they decide to move away from it. Now, hear me. You've got this W formation on the 4-hour time frame. All right? Price has moved up. Principle would say that we are in a level 1 retrace from this W formation on the 4-hour. Forget the 1-hour cycle. Okay? This is for a longer period of time. This would be retrace level 1. This move will only be invalidated if Bitcoin comes down and breaks below this area here. So between 32,000, just at 32,930 and 31,879. The reason why I'm using these 2 points here is because I'm going to give some freedom because Bitcoin could actually come all the way down here, spike it, but come back up and form a pattern, and move out. Okay? But this cyclical move that we see right here is not over until it breaks the lowest point that it moved aggressively away from, because that's where they turned the market. That's when this pattern is invalidated. Now, for some of the guys that have been with me a while that are asking the question, Tino, what if there is a big W formation? What if we're on the actual second leg of a bigger W? Well, here it is. Let's take that bigger W. 1, 2, 3, 4. I'm going to say it now before anyone tries to act funny with it. If they are going to mark down and hit and create the second leg of this move right here, they've got every reason to, because there's liquidity right here. We're waiting to see how low they're going to send price. Okay? The structure of the W formation says that you want the first leg to be lower than the second. Obviously, in this zone right here, it didn't go down deep enough. But we didn't have any liquidity other than this zone right here. They may not have wanted to move Bitcoin down to that zone. Still, it was a valid play. Didn't last long, but it was a valid play. Could this be the development of the second leg? Now, we will only know when they move down and they stay in this region. This is the area they will need to stay in. I don't care if Bitcoin comes down and stays like this for the next 2 weeks. It doesn't matter to me. As long as they stay away from this area here. But unfortunately, ladies and gentlemen, they can simply just collapse price and drop all the way down. Because we still have not come back to the last point in the chart when we really moved. You see, this little move from here was just a drop, retrace, continuation up. Okay? But this is when we really moved. And the difference in price is 29,151, even lower. Right? At 28,712. Remember, guys, we will never know at what point the market is going to move to a particular point based on how cheap people think Bitcoin should be before it starts to move back up. Whatever indicators or any factors in the world that could contribute to the value of Bitcoin going up or down. We have had a plethora of instances when this has been the case. El Salvador adopting it as legal tender. They declared it. It tanked. All right. Michael Saylor buying loads and loads of Bitcoin. It tanks. So when you expect it to do something positive on the idea of adoption or accumulation, doesn't happen in the charts. They did that back in the day at the start of last year when I came into crypto, because they had to give people a reason to believe that when someone talks about it, it's going to move up. So that's the only way they can induce people to step into the game. Come on, guys. They are only printing candlesticks based on people committing liquidity in the exchanges. It can only happen if you put your money down. That's you, that's institutional traders, banks, hedge funds, governments, you name it. Anyone that's involved in Forex are likely to get involved in cryptocurrency and try and do the same thing. So forgive me if in the past few days we've been talking about Bitcoin only, but it's all been about what Bitcoin is going to do. Now, we can look at a few altcoins, but quite frankly, ladies and gentlemen, altcoins movements ain't really going to be happening unless Bitcoin starts making its move. Given that we've had all these tensions across the world, I mean, I can have a look at a couple of altcoins, see who's actually going to catch my eye, and there ain't nothing across the board. Yeah? There ain't nothing that's caught my eye to tell me that it's doing great. VPAD. Well, no interest. It's down. What could be... Look at this. A bleed across the board. Okay? Smooth Love Potion, down. And that was a winner a couple of days ago. Yeah? Look at Ethereum. Now, I said this before. I love Ethereum because she trades so much better. She does respect the ranges. And look what she's done. Ethereum has stayed within the range of the psychological lows. Okay? That's really good news for us. All right? Bitcoin hasn't. It's completely rejected that. Gone out of the park. Remember, Bitcoin is more volatile than Ethereum. So if you are going to come to trading, guys, in my opinion, Ethereum is a coin that will actually give you an understanding and respecting particular ranges. But just look at what the range is doing. Ethereum tends to give you a little bit more information. The ranges are flat. So holders are pretty much waiting for a move up or down before they start accumulating more or reducing and taking some profits out. But we have zones in the chart that they are likely to come back and return to based on the narrative that they're making a run for liquidity. Okay? Ladies and gentlemen, I want to thank you for your time tonight. Forgive me if I've been going on. But for all the new people passing through, just protect your assets, man. All right? Come into trading to understand how it works. Forget the money. The money's going to come afterwards. Remember, you can only go once in the direction, either up or down. Okay, hedge mode is enabled and what have you, but forget that. But what I'm saying is you've got a 50% chance of it being successful in your trade. The only way it gets complicated is if you start holding on to losing trades, thus reducing the amount of time you've got to go back into the market to recover your loss. Keep your losses to a minimal. Okay? If you're down 8%, you only need to make 11% to break even by principle. You're down 10%, you've got to make 20% to break even. You're down 20%, you've got to make 40% to break even. If we start hitting the 50s and the 60s, then we're getting into triple digits on returns. Well, if you're not able to maintain a stop loss of between 8 and 10%, how are you going to be expected to manage a 20 and 30% stop loss and let alone try and make back double that to recover from the loss? That's when we start getting into the idea of gambling. Okay? A gambler will tell you how much he can win, but a trader will tell you how much he can lose. Be sure to like and subscribe, ladies and gentlemen. I've got nothing but love for all of you. Take care of yourselves. Peace.